We actually still quite like the Asia dollar. I mean, we think that despite this debacle that we're hearing on this on the U.S. debt ceiling, we do think that they will get through it. Although I think it is a concern that brinksmanship is a strategy for negotiation that does not generally fare well for sentiment. But we do think they will get through. And actually, believe it or not, Asia credit spreads are actually outperforming global credit spreads. So yeah, so we're quite sanguine on Asia dollar. In other currencies, I think with this difficulty in the U.S., I think that I think it's a bit more of a risk-off sentiment, particularly as China has somewhat disappointed in its recovery. So.
Understood. And China has disappointed. So how does that play into the case for China government bonds in the longer term, and when you consider that there are some real question marks about the pace of the recovery, the pace of the post-pandemic rebound emerging? Yes, it is a big ship to turn around, and now at the same time you are having not only the US and China going at it with a tech war potentially, but also rising COVID cases. Where does that leave the case for Chinese assets and fixed income especially?
Yeah, well, I think in terms of, I do think that in terms of the policy environment, it is different in China. They're having to go in the opposite direction as everyone else. But the bigger macro story that seems to be more concerning for people is just the ability to turn around post-COVID. Obviously, I think on the positive is that it has not been as inflationary to the world or to China as it had been for when the developed countries kind of recovered from COVID, but the more structural problem, particularly in the Chinese real estate and some of the LGFV, still pose a very big macro drag on the economy, and that doesn't seem to be dealt with yet.
How earlier on today we got the Tokyo CPI, and the core number, so ex-food and ex-energy, came in at the fastest year-on-year pace since 1982. And in terms of market reaction, we're seeing the yield on the 10-year Japanese government bond, the JGB, rising to the highest since April at 0.45%. What do you think would be an appropriate path from here from the BOJ, given that already yesterday Mr. Ueda was saying that they could make some tweaks to the YCC, perhaps targeting the 5-year instead of the 10-year?
Yeah, I think this is what's caused all the excitement in Japan, right? This prospect that actually, we're going to get a change. But of course, he's also been very cautious, particularly as we can see what, removal of QE has done in the US. But you look at the regional banks, etc. There has been fallout. And I think in Japan's context, QE has been going for longer and it's a bigger magnitude. I think they will have to tread carefully. There's a lot of pressure for them to go early, but I think they have to tread carefully. So I think for now, we do think that they will eventually have to move it. But given that there is prospect that inflation itself, given some other, may decelerate a bit, I think they can afford to wait a little bit for now.